This is great news for Comcast. The biggest risk for Comcast equity was some crazy bidding war that would have driven the price up to really unpalatable levels. And if Comcast had won in that situation, it would have been an awful outcome. The fact that they're walking away in a disciplined fashion at this point is a great outcome for the equity.
What about Sky, though? Are they overpaying or over-chasing for that as well? Should they walk away from that, too?
In my view, they're overpaying a little bit, but it's such a small asset in the context of Comcast overall. So I think Sky's worth £13 with the synergies. They're paying $14.75 at the moment. The magnitude of overpayment is worth about $1 a share to Comcast stock. I think it's worth 50. It shaves off $1. It's a little bit of lost value, but it really doesn't matter. Even if they bid all the way up to £16, which is the very limit of where I think they will go, it's fairly inconsequential in the grand scheme of things. So the most important thing was them walking away from Fox in a disciplined fashion. They've done that sooner than I would have expected at a lower price. I actually thought the fight could go higher for Fox. So this is a big relief, and it's why the stock is trading up today.
Yeah, I mean, it's been sort of reacting as Faber reported that, and then another boost today. So Lee, that leaves the regional sports networks of Fox. Who's going to buy those?
It could be a number of candidates. I mean, you've got the usual suspects, Comcast, for one, with NBC Sports. They own a number of RSNs. AT&T, they own several RSNs. Then you've got a number of other media companies that have sports relationships. Discovery owns Eurosport, could make sense. Sinclair owns Tennis Channel and Stadium. Then you've got potential of private equity who may be interested in it because these do throw off cash flow, have multiples of 12 to 17 times cash flow. Then you have potentially the OTTs that are out there. Anybody from DirecTV Now to Sling TV, all these virtual MVPDs are putting RSNs on their distribution channels over the top. And then on top of it, you have the teams themselves. There's potential interest from the Yankees in buying back Yes Network, which is 80% owned by Fox. So potentially teams could be involved in buying back these RSNs.
With that many potential buyers, Lee, I mean, does it seem as if the valuation is going to stretch to a level where it will really bring down the net cost to Disney of the Fox assets? Or is everybody pretty much looking at the same numbers and feels that these networks are worth kind of what everyone else thinks they're worth?
Look, I think everybody's looking at the same numbers. I think it's going to be a competitive marketplace, though. And there are a variety of buyers. Apparently, Disney may offer these networks up to a number of buyers as compared to one single buyer. And in that case, with a number of interested parties, with a number of interested in different strategies, they may very well drive up the price.
Jonathan, what about Disney? Are they overpaying now, or is this a good deal for them, the Fox assets that they're going to walk away with?
So they're paying a lot less than they might have if the fight had kept going. We thought it could have gone all the way up to $45, $46 a share. To walk away at $38 is a great outcome for Disney relative to where it could have gone. If you look at the forecast they put in the latest proxy, they're not. It doesn't seem like they're overpaying. It seems like Fox is getting full value for these assets, plus most of the value of the synergies. So the economic value is going to Fox shareholders. The strategic value of putting these assets together over the next sort of 5-10 years, though, is tremendous. So this will end up, I'm sure, being a good deal for Disney.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.